I'm not saying I'm sitting here and saying it's easy to find a rental property, because it's not right now. But if you continue to run deals, you will eventually find one. You just have to try harder. Now, there's eventually going to be a time in our careers, again, where you can go to the sheriff auction or wherever and pick up 3 or 4 homes, no problem. But that's time's not right now. So you have to continue to run deals more and more. And
We're the Gillen Group. Put your home in the hands of experts.
Why do you want to invest in it, and what's your ultimate goal?
Yeah, so my name's Greg Allen, and I currently own 3 rental properties. I have a duplex, a single, and an Airbnb. And my wife and I, we made a choice when we bought our first home, which has set us up for forever. If you're ever looking to buy your first home, buy a duplex, and that's what my wife and I have done. Our first property we bought a duplex in Columbus, lived in one side, rented out the other, and when we sold it and moved to Dayton, we used that equity to buy our primary residence plus an additional rental property when we first got here. So our goal, my wife and I, is to own 50 rental properties by the time we retire. We're a little slower paced than these two guys,
But it can happen quick. All of a sudden, you could buy 10
but
in
it
a year.
happens,
So,
yeah.
Absolutely.
It happens quick, getting up to 3. So probably looking to add another, hopefully by the end of the year. So
Yeah.
yeah.
You want to skip?
Oh, sorry.
So it's okay if you have 0 properties and you're just starting, but like for Bryce, like it would be like, why are you interested in it? And like ultimately, like what would be the goal because you're interested in it? So
Yeah, so like Ryan said earlier, my name's Bryce Haney. Totally new to this. I know next to nothing. Probably the least educated person here when it comes to real estate, but that's why I'm
welcome,
here,
Bryce.
Just to be a
It's
sponge.
like a AA meeting.
Just to be a sponge. Just to be a sponge and soak up as much information as I can. So my goals are probably much different than your guys'. My initial goal is to like just pull the trigger and get started, because probably the best piece of advice that I've ever been given is like now is the best time to start if you haven't started already. End game goal for me is to all I've ever been taught is to like invest in the stock market and make your 7% or whatever a year it is. So like end game for me is to like you mentioned earlier, park money in a different spot. And on top of that, it would just be a different challenge for me. Like I said, I know nothing about this, and it would just be cool to learn and another way to make money and save for retirement.
Would you say that for Bryce, like Bryce just graduated college, would you say for you've watched a lot of people at NCR Country Club invest in real estate around you and make those investments, so it's like that's like kind of what you should be doing? Is that why you like?
Yeah. I do. That is a good way to say it. I do feel like I should be doing it, because like I have a lot of friends. Like Gillen's obviously the best example, and on top of them, I have numerous other friends that some of them don't even mess with the stock market like I do. They just park their money in real estate and forget about it. So I don't know. I feel like I'm being molded into like, you gotta do this, dude.
Cool. I'll peer pressure you into doing it. So, yeah.
Cool. Thanks.
My name's Drew Moore. I have one single-family home rental in Oakwood right now, and so I kind of got that a little bit of luck. I lived in it for a year with my wife, and we've got 3 boys. We then moved into the house right next door, for sale by owner, a couple that lived there for 60 years. I grew up across the street, so I was able to get to them and kind of make an offer before it hit the market. My goal right now is just to get one more this year. I'm thinking a little bit more short-term, and you know, with 3 kids and a wife that stays home, so trying to garner the cash to get more properties at this early, and got the LLC set up.
But if you would do one every year for the next 20 years, and it's like, then you've got some mountain of houses, and that's fantastic.
Absolutely.
For your Oakwood property, you have low interest rates on both of them, and
for my initial home, I do. For my home I'm in now, I did do a 5-1 ARM.
Yeah.
And I got 4% right before everything kind of exploded 6-7 months ago.
you're still hanging good.
So I'm hanging good. If things don't go down, I can afford to refinance and pay it, but I'm just like, why at this point? I can save more money in the short term. So.
What's your overall vision? Like, what's the reason? Like, what's the overall vision for you?
I mean, I think in a cliche way, kind of the financial freedom that you talked about, just being able to rely less on my sales job that I'm in now and more of a passive income if things do go in kind of a south direction, and ultimately, rely on that income, when I'm 50, 60 years old to support my family and live a good life. So.
Yeah. And I'm not saying to people like, hey, don't invest in the stock market and all that kind of stuff. To me, I just see it as like I have invested in it, and the benefits. I don't hear about a lot of people, unless they take high risk stocks, make the money that Jake did over 4 years on his own. We're talking about one property. We're not talking about all of his properties on one. Like, made a great investment on it. So to me, like it's a, people always think it's a riskier play. I think it's a safer play.
Yeah.
To me. So, Brooke, do you want to talk about why you invest in real estate?
Because my husband loves to spend money on properties.
She has no choice. She has no choice.
No choice.
Yeah.
On the ugliest Most trashed homes you'll ever see.
Yeah, we buy ugly homes. You want to
Going
go?
back here or going over here?
Yeah. Kara. Yeah.
My name's Tom Hoskins, and where's the other gentleman? Where he was over there is someone that knows less than him.
He went inside real
Here.
fast. Yeah.
So he
Yeah.
can feel. We'll have to tell him when he can rest at ease. Main reason I'm here is obviously to support my son. As far as myself, it is very interesting to me. He's talked about it for years. But for myself, me and my wife, I'm in my mid-50s now. We've worked very, very hard to get 3 kids through school. And he just graduated, a month ago. So it is a very nerve-wracking step for me after you've done everything you can to get them through school, and then you're 12, 13, 14 years from retirement. That's a scary step for me.
Yeah.
Kind of that in-between zone.
Yeah.
Yeah.
Is this for me? Is it not for me?
Yeah.
Is it for him and I just support him, or
The greatest thing that he has is youth, being young. Like, we started at 26, and the biggest mistake we made was saying that we didn't start at 24 or 23 or 19. Like, we graduated high school in 08. If we would have started investing in 2008, we'd be retired right now. We'd be done. And because we could have picked up Kettering houses for 15 grand. So, but like, you're always going to look back and go, man, I wish I could have got more for them. Like, at that point, because he could put 30-year loans on them and he'll be 50 and they'll be paid off.
Right.
So for him, he's got a lot of time. I mean, I'm not saying you don't, but like, he's got a lot more. Yeah.
let's just be
Yeah.
realistic there.
Yeah.
So, but
I always say I'm
anyways.
blunt. So, but yeah, that's fantastic. Tommy, little Tommy.
So I'm Tommy Hoskins, and that's my dad. My why is I've always seen people like you guys and videos on YouTube, Instagram, and talking about real estate, and I always found it very interesting.
Yeah.
So I was like, well, these people are doing all this, and why can't I?
Yeah.
So I started coming to these meetings and learning more about it. Like, my goal right now is to just learn as much as I can from you guys, listen, and find my spot to jump in and get at it.
Yeah, that's fantastic, man. I think the biggest thing is going to get over that hurdle, like the first one, and just start seeing the income coming in on them, and then it's like, okay, this is not as scary as I thought it would be, and then you go. So, and that's what we're going to talk about next after we go around. So,
I bought threw up the first time I wrote the first contract on that first one.
I
After that, it gets easy.
I legit couldn't see the paper. I was like, my eyes went blurry. I was so nervous, and I was like 25. And my dad's like standing next to me. He's like, just sign it. Just sign it. I'm like, hey, I'm nervous. He's like, geez, just get it done. I'm like, you've been doing this forever. Yeah. So, but we bought them within the same week of each other, I think. Yeah. So.
I feel like that buying a car.
Yeah. I know. We bought a car the other day, and I was He kept trying to sell me every insurance possible, So. Yeah. I did get rim and tire protection. That was good because my wife scrubbed the rims the first week we had it. So. So, you want to go next?
I'll go real quick.
Okay, yeah.
Chad Burleson. I thought about investing in real estate about 10 years ago. I got really excited about it. And then I started a business about 8 years ago. And I always had kind of the mindset of, all right, a house is going to cash flow you, a couple $100 a month, and you're capped. And a business, it's through the roof. There's really, no cap on how much money you can earn. And then just after, doing more research and speaking with guys like Ryan and, the professionals in the industry, you quickly come to learn that there's appreciation too over time. And even though I work so hard on my businesses and I make, X amount of money, they're only going to be worth how much they're going to produce, whereas real estate itself, sure, if you're going to be cash flowing a little bit more, you can raise the rents and that type of thing, and it's going to be worth more when you sell it. But even just a single family home, just over time, what'd you say you made? 175K.
But that was a 6 unit.
Okay.
Yeah.
But you $15,000 in Kettering, 10,
put it
20
for
years ago.
example. 4 years ago, I invested in 3 duplexes in Waynesville. Bought them all for $220, and they all got appraised for $400 a couple weeks ago.
Yeah.
And that was like 4.5, 5 years. And it was 180 grand more on each of them. So, we did the math on about what we broke down per month, like when we were only making $300 a month net after like expenses, and like we're like, oh wait, kind of like you don't think about it until it actually comes to fruition, which is good. You don't bank on it, but when it does happen, it's really nice. Mm-hmm. So, yeah.
Yeah, so I'm looking more into that now, just for those reasons. But just, in the future, I think it's just very important to just kind of, I have 2 boys. I'd like to set them up, kind of build the foundation for them. And they have aspirations to do whatever they want to do at this time in their life, but at least they'll always have, hopefully, some type of business to follow if they choose to take it over, or at least, have some type of, I won't call it a fallback plan, but hey, they do have, something else, go try to accomplish your dreams, and if that doesn't work, hey, you got some some other cool dreams
Some
that you
passive
can
income
pursue
coming
here
in
as well.
Yeah, and for Chad, for your like businesses, he owns some gyms, and it's like one of those things. It's like you really don't know. You have an idea of what you're going to make, but you don't know exactly. That's what's great about the passive income coming in. It's like, yeah, we're making money over here and making money over here at the same time. And so, like when I like talk about the stock market, like kind of really don't know like what you're going to be making on like that. And you're not like, we're not pulling it out or anything. Usually it's for your retirement. But
And to Bryce's point, had I started 10 years ago and didn't wait, what nice of a position I would be in.
yeah,
So,
definitely when you lived in California,
I
you could
definitely
have
would say,
you could have had some equity there.
Don't wait.
Yeah.
Pull
Yeah.
the trigger.
Appreciate it, Chad.
Thanks, guys.
Hey, I'm Natalie, and my husband and I, basically our end goal is to shave off years of retirement. Like, if we don't have to retire when we're 65, that's the plan. So looking for that passive income, building that, or additional income streams. So we've moved around a lot the last 15 years, but we've lived and flipped those whole 15 years.
Yeah.
So we stay in a property a minimum of 2 years, sell it. So we've done it 7 times.
So you have 7 properties now?
No.
Okay.
Because we sold them.
Because sold them all, okay. All right.
Because we're not smart.
Yeah.
But anyway, this last year, we're finally kind of redirecting. We're still figuring out what our future looks like with real estate. But we've purchased 1 rental on the east side of Dayton, and then we're in the middle of a flip on the clock, like a real flip. So that'll be our first one that we're working on right now. So we're figuring it out. And the reason I came tonight was just to hear everybody else's goals, because it helps you define how to get there or how to put that into an action plan.
I think it's comforting to know that like everybody's kind of working for the same thing. There's like everybody's out here really like working for the same thing, and it doesn't matter if you have 56 units or 0. There's still like a little bit of nerves to it. There's still a little bit of nerves to it, but at the ultimate point is like the only thing I regret about in real estate is the ones that we passed up on. And I mean, like we would look at each other and go, "That's not a good deal," and I look back now and I'm like, "Jesus, that was such a good deal." Yeah.
Yeah, but I feel like we bought something that we didn't think were going to be great deals, and then they ended up being great deals. So it's like, you win and lose.
You win and lose. You can't, I guess, buy them all. But at the same time, like, yeah, I'm trying. Yeah, yeah. So, but
Can you
yeah.
tell us about your flip and your rental on the east side?
Yeah.
Yeah, so the rental on the east side, it's not quite ready to rent, but it's so close. We're right there. And then the flip we just purchased in March, I think it was, from Ryan.
Yeah.
And it should be listed for August.
Fantastic.
So
that's
we bought it
awesome.
for $100,000. We're gonna have 40 in it, and we're hoping to list for 2 to 209.
That's fantastic.
Yes.
That's great.
So
Usually,
Are you guys doing the work yourselves?
yeah. No, you're good. Yeah.
We're doing it with another couple, Megan from Matt's office, and so my husband and Matt are both contractors. They're doing some of the work, but we're hiring as much as we can out.
It's the Schroeder house.
225 Schroeder.
Yes.
Yeah, it's the Schroeder house.
is.
Jake owned that too.
Tons of appliances and paint cans. OMG.
Oh,
I am.
You guys should have counted.
And then extra
Hey,
washer and dryer.
I had the beer can house. You have the paint. You had the paint can house. There was 4 or 5 washer and dryers in there, right?
It was crazy. They had
And-
like a laundromat.
No, there's 22 appliances in there.
What?
In the garage and the basement. And then hundreds of paint cans.
Oh man, we could have crushed it.
Hundreds of price.
Yeah, the paint cans were unbelievable. The amount of those,
Yeah.
and
That's a really good location, though. I always like the location of that house and the layout of that house are like.
Yeah, it's
yeah,
super
we
cheap.
just didn't have
Garage in the back.
we didn't have the crews to do it, and that's why we put it up. But usually when people do flip houses, like everybody wants to make like this is. I'm not saying for you, it's like because you are going to make this, but like usually people are like, I want to make 50, 60 grand, but it's usually not the case. If you make 15 to 25 in Dayton, Ohio, like that's really good. Like you did really good. I mean, there's been some cases where we've gotten above that, but like, yeah, you guys should do fantastic on that. And having contractors do that are in the family doing work stuff definitely helps, because you guys are at 40 in it. We probably would have had 60. So, but you guys are going to do fantastic on it. So I cannot wait to see how that finishes
we're
up.
excited.
That's very, very, very exciting.
And then
So-
the East Dayton property, it was like a once in a lifetime thing. So somebody bought it from the city of Dayton for $2,500 and then like held it for 7 or 8 years.
Yeah, didn't do
And,
anything
like,
with it.
They
Yeah.
demoed it. That was it. So we picked it up for $15,000 and then put 40 in it. And I mean, we can get probably like $1,000 a month over there. So and we don't have very much in the house.
That's
So that was a
fantastic.
pretty good pickup too. But yeah.
Good for you guys. That's absolutely fantastic. And the goal is to kind of slowly start building that portfolio up and keeping them.
Yes.
Great.
That's the plan.
Great. Absolutely. So cool. Last but not least.
Hi, I'm Jack Cook, and I'm like these guys here who don't know anything about this, but I'm excited to get into it. I want to get some passive income, something to bridge my semi-retirement state that I'm in, and also just another stream of income.
Yeah.
Tax liabilities and all that stuff. We've always played the stock market, and I used to do stock clubs back in the day, but
Yeah.
this I know nothing about, and I look forward to learning from all of you and seeing where it goes.
Perfect. Yeah, appreciate it. Yeah, thank you. So common theme every time we do that is essentially everybody wants passive income, they want security, they want something other than their normal revenue stream. I don't meet a lot of people that just solely do real estate investing. Usually there's something that supplements the real estate investing. I mean, they are out there. I'm just saying, we don't meet a lot of people, definitely not in Dayton, that are just slowly doing the real estate investing. So, but yeah, so everybody has that same kind of goal. So once you guys have your goals and why, the hardest thing is writing the first offer. And it's not buying the first property, it's writing the first offer. Once you start writing the offers and getting declined and denied and everything, it starts becoming a little bit more normal. You got to kind of become numb to the result. So if you find a property for, let's just say easy numbers, 100,000, and you need to write it for 90, write it for 90. And if you don't get it, that's okay. Just move on to the next one, because there's going to be 1,000 of them come up this year that are good properties. So Carol, you have a couple clients that, you have some times where you write an offer a day for them.
One client literally sent me 6 properties, and we're gonna go in 20 grand under on all of them. We didn't get any of them, but it's just all part of the game. That's what you do.
But there's definitely cases where you write offers that you think, man, we're not going to get this, and you do get them.
For example, one in Belmont, it was listed for 85,000.
Here, start over. One in Belmont.
There was one in Belmont that was listed for 85,000, and it was just on the market for
I think you turned that microphone off, didn't you?
No, I hit the button. It's a mute button.
Okay. Sorry.
You want to check the levels?
Do I have to start over again?
Yeah.
I just didn't want you to go through the whole thing. I thought I just flipped it off. Sorry.
Okay, there's one in Belmont.
Yeah.
There was one in Belmont that was only on the market for a day or two, and it was listed for 85,000. And my client's like, "Look, I don't want to spend 85,000. Let's go in 10 under." And I'm like, "I don't think we're gonna get it, but we can try." Well, the seller was in a position where they had to sell their house because they had to buy another house. So we went 10 under and we got it. And now they're making a crazy amount of money in rent a month. They're making $1,200 a month.
Yeah.
So
don't discourage, find out where the numbers work and just write the offer for that. And if they say no, okay, that's fine. Then we just move on to the next one. Don't get emotionally attached to it. So when you get, people see the price and they'll go, that's not going to work. Well, it might not work at that number, but eventually for most places, it will work at a certain price. Now, it might, if it just comes on the market and it sells in a day and you're going up against multiple offers, it's going to be tough to get it down. But it's great to look at those properties that have been on the market for 2 weeks to a month, and maybe we can get it down and we can make it work. So really get that. So when it comes to writing offers, you're not bothering us, okay? Call us. We'll go over the numbers with you. We'll make sure you feel comfortable with it, and then we'll write it. And if we don't get it, it's no big deal. We move on to the next one. That's just how it works. You don't get emotionally attached to them, okay? So I always say, when you're looking at an offer, you're looking at a deal, make sure the numbers work first before you even go out to the house. Do not get to the house first before you run the numbers. And the reason why I say that is you're going to end up getting attached to the home, okay? You will get attached to the home, and then you'll go home, and you're going to go, honey, look, the numbers work because if we do this, 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 and this, and we get the rents up to this, and we manage it ourselves, and then all of a sudden, because you're emotionally attached, you're making it work. Instead of just doing the numbers first, get out there, walk around the place and think critically about the property. You won't be as emotionally attached, because I'm telling you, if you get out there first, you're going to end up liking it because it's in good condition, and you're going to make a decision that's based off of emotion and not based off statistics, because stats and numbers are what matters when it comes to real estate. 90% of the decision is based off the spreadsheets, and then 10% is based off of you walking the deal, essentially. So
I always tell people, like, when they're getting started, at least it worked for me, and it helped, like, kind of shake or settle the nerves a little bit, was just analyze a ton of properties. Like, find a spreadsheet. Ryan has one, I have one. Like, we're happy to share them. Or, like, find a spreadsheet that works for you so you can see all the numbers, like, in front of you, right? See whether it works or not. And I just ran hundreds. I mean, like, any property. If I just drove past her, if I saw it on a website or Realtor.com or Zillow or whatever, like, I was just running properties like crazy, just like a madman all the time. And what it did for me is it, like, made me more comfortable with, how should I say, like, my expectations. And, like, okay, like, I got to the point where I'd be driving down a street and be like, oh, that looks like a good house. Oh, but it probably won't work because I know property taxes are really high here, or whatever. Like, you just get really comfortable with the analysis part of it and knowing, and it takes away that fear of, like, I think Mr. Hoskins said, was like, I just don't know. Is it going to be like a good buy, or is it not going to be a good buy? Is it going to work? Is this right for me? It's
and
like,
you know what's great about that, Jake, is that right now we're in a market that's up. It's tough to find deals. There's no questions. Like it is tough to find deals. That's why we have to keep looking hard. It's not the, like, I want to buy a property tomorrow. Okay, here's 10 of them. Which one do you want? But the big problem with that is people are like, well, I'm going to wait till the market comes down and I'll start running deals and all that kind of stuff. No, you got to start running deals now, because you start running deals, how do you know when the market goes down?
how do you know it's a good deal?
How do you know it's a good deal if you haven't ran them already? Because what's going to happen is you're going to run 50 deals, and all of a sudden you're not finding them. All of a sudden that 51st deal you're going to run, and you're going to go, wait a second, that's way better than all the other numbers that I've ran. Let's look into this a little bit further. So,
because you're running all these houses at like 150,000, you're like, man, it's really close, but it just doesn't work. And then you see one for like 140 or 135, you're like, well, I know that's going to work. Let me just run the numbers on it. You get excited and you pull the trigger.
Like that a month ago or a week ago for 20 grand more. So you got to continue to run the deals, because you'll actually notice the market will be shifting before other people will know that they're shifting. Because once it's shifted and you realize it, so does everybody else. So that's always, I think that was one of the biggest things that I noticed, was that you always have to run deals. It doesn't matter what the market's in. Hey, Ryan. Yeah. So one thing I do want to leave you guys with, we got about 5 minutes or 10 minutes and stuff, then we can ask my questions and everything. So I always try to, like, each month I try to figure out, like, where the market's going to go, okay? And I will tell you is that no one knows where interest rates are going to go. They never have, and anybody acts like they do. For my whole real estate career, everybody said the interest rates are going to go up, and they just never did. Now finally they did, but there was lenders and top economists that always would say, this is the year that they're going up. We expect it to be this percentage by the end of the year, and it was never on it. So you just can't, Greg.
I predicted at the beginning of the year that rates would be at low 6s to high 5s, and we're still high 6s for a 30-year fixed on a primary residence. Okay, that's a primary residence, not an investment property. So that's typically 1% higher. So now you're talking 7.5% to 8%, depending on the deal. But yeah.
So you gotta make sure when you're like. Yeah. So, thanks. Yeah. So that's why you got to keep analyzing deals, and you just got to continue to not worry about the interest rate. Just don't worry about it. If the deal works at the interest rate, it's always going to work, because you're going to have that interest rate throughout the loan if you're doing a fixed rate, or you just refi it when it goes down. So if the deal works at that interest rate, it's always going to work, because rent will go up, appreciation, it will go up, and all that kind of stuff. So don't worry about that. So when the housing market, I want to leave you guys with this, is that I don't see the prices coming down. Okay, and the reason why I don't see the prices coming down is we are in Dayton, Ohio, and what's happened is a lot of people have moved out of big cities, and then from the big cities they have moved to like Columbus and Cincinnati, and people from Columbus and Cincinnati have been priced out, and they're saying, hey, well, let's go to Dayton because that's more affordable. So we have got an influx of people moving into the area, which is great. We're one of the top 20 hottest markets in the country right now. We're 11th. Well, that being said, if we would even see a 5 to 10% drop in our market, which would be considered a pretty big recession, it would pop right back up, because every investor from California, Texas, Canada, China would find out about our market, which they already are here, because we talk to a California investor every single day, it seems like, but they would scoop every single property up that had a 5 to 10% haircut. No questions asked. The demand would be through the roof for any out-of-state investor. So for the thought about it coming down anytime in the future, I don't see it happening. So that's why you need to continue to run deals, make offers, and try to, because You just have to run more and more deals to find that right property. I'm not saying I'm sitting here and saying it's easy to find a rental property, because it's not right now. But if you continue to run deals, you will eventually find one. You just have to try harder. Now, there's eventually going to be a time in our careers, again, where you can go to the sheriff auction or wherever and pick up 3 or 4 homes, no problem. But that's time's not right now. So you have to continue to run deals more and more. And I just don't see, if you're going to be on the sidelines waiting, you might be waiting for a while. Does that sound about right? Yeah. I mean, I just don't see it any other way. I don't see, with how low our market is in the sense of barrier of entry, I just don't see anybody coming in, not coming in and swooping up these houses if we would start to see, if we start to see the prices drop on them and people could, the barrier of entry would be even lower. So does anybody have any questions on today at all? Yeah.
I have a question for you, Jake. So you had mentioned that you were paying your properties down relatively quickly, not so worried about the cash flow. Were you just reinvesting the cash flow to pay down the loan, or how were you doing?
So it depends on the property. So sometimes I'll like speed up the amortization. I'll just like pay down the principal a little quicker. Or sometimes I'll save it up and then buy another property. You know, it kind of depends on the property. If they're smaller cash flowing properties, like if I'm making like $30 a month or like $115 a month, like something like that, I'll probably just roll it into the property and kind of pay it down, add it to my mortgage payments. But if I'm making, you know, higher than that, like in the thousands, I'm usually like setting aside some for a reserve and then banking the rest of it for future projects and different things like that, kind of setting it aside and earmarking it for something when it comes along.
Okay.
So it depends on the property.
Sure.
I know that's not a super direct answer, but yeah.
Good, makes sense. Thank you.
Yeah.
Any other questions?
Yeah, I have a question on, you say when you're talking about running the numbers earlier. Yeah. Okay, you know, my current method, I guess, is I'll get on like Zillow.
Yeah.
And find a property, look at the price, go down, look at, you know, what they pay in taxes.
Yeah.
What is my, you know, mortgage going to be, and everything associated with that, and then based on what I think I could rent it for, is that the same thing, or are you doing something different?
Well,
or simplified, I guess.
That's simplified. It's good. Here, you take that. You looked like you were really eager.
No,
to answer
yeah,
that
I think that's
Yeah.
a good start. I think that's a really good start for it. I think the hardest part when you're starting out is like knowing all the little things, like how much am I going to pay for property management? How much am I going to pay, or how much do I need to
I
factor
haven't
for
even
like
considered that yet.
right,
so.
or like vacancy, or like maintenance, like how much do I need to set aside for maintenance every month? Like, so taxes, mortgage payment, insurance, like that's all, you're on the right track, like, because those are all the major things you need to think about to make sure you're cash flowing. But there's all these little tic-tac things
There's like
you need to
capital
also add.
expenditures. Like,
Yep, capital expenditures, like what am I setting aside for like roof repairs and
Right.
HVAC
Yeah.
and things like that. And that's huge. Insurance even, like I have a terrible time even to this day. Like I think I have a good calculation, but then I get an insurance quote and it's like way off base. So insurance, I'm still figuring out how to get an accurate quote on to this day. But basically it's kind of factoring in the numbers. But I mean, it's probably, I would say every time I run a property there on the expense side, I would say there's 10 to 12 variables. I have a spreadsheet with all of it, but it just breaks down to percentages. So like good example is like I usually do 10% of rent for maintenance and repairs. Just set that aside. Property management, our current rate's 7%, so I do that. Capital expenditures, I usually do 1%. But again, it's just learning all those little things to plug in there. And if you're just doing it on a calculator on your phone, you can get lost pretty quick.
Yeah.
So it's nice to have like a spreadsheet in front of you. But like I've done that too, where you're like driving down the street, you look it up on Zillow and like type in all the info. It's like, of course.
I would say it will be a little bit more elevated there. Like the numbers will look better the way he's doing it.
Absolutely.
And the way like on our spreadsheet, because we'll put vacancy rates in.
Mm-hmm.
We'll put vacancy rates, a little bit more capex, a little bit more maintenance and repairs, and all that kind of stuff. So,
Yep.
Well,
yeah.
in your experience, how accurate is what Zillow's all I know. How are they pretty accurate in what they list?
So this is what Zillow does on every property. They're going to put every property with a 20% down payment, which is probably good because that's what you're going to put down on an investment property.
That'd be a minimum, right?
Yeah, that's your 20% down, right? So if you want to make it super easy, I mean, here's the thing. Ryan and Jake are right. They have spreadsheets where they can calculate the vacancy to give you a better accurate figure over time. But if you want to make it really simple for yourself on terms of like cash flow, a lot of the times this is what I do. I go to Zillow, right? And, I look at a property and I see the area it's in, okay? And then I flip Zillow to rent and I circle around the area and it shows me this is what's available for rent in this area. And then it shows me, 2 bedroom, 1 bath, $825 a month. 1 bedroom, 1 bath, $750 a month, And so now I understand what is the going rent for this area. And so then I take that rent and I put it against what my mortgage payment's going to be, because Zillow's going to give you a decently accurate figure of what your mortgage payment's going to be. And if you're cash flowing, you're cash flowing. And so that's one of the things I wanted to say. Sorry to butt in.
Ray Allen's a lender, so that's
Yeah, a mortgage lender. So one of the things that I was going to say is everyone sees that the rates are up, but can anyone here tell me what is also up right now in the current rental market? Rent. Rent. So if rent's up and you have high interest rates, what's the problem? What's the big deal? Because at the end of the day, cash flow always wins.
Do they run parallel? Like if the interest rates go up, people can't afford houses, then so there's more renting?
It's all about right now. It's an all supply demand thing. It's all about there's a shortage in the market of properties. People would prefer to be in homes than in rental properties in some places, and so that's what's driving rent up is the availability of rental properties. So
Perfect answer. Yes. Perfect answer. So
That's a really good question, though.
yeah.
Well, to expand on that though, but so when you guys look at properties, are you just massively running numbers on 100 properties? Does it matter where it's at? Or?
No, honestly, so I've gotten to the point to where, like, 'cause I've ran so many deals, like people on our team will see it. Like, I'll pull up like 40 properties, and it's unbelievable how fast I can go through them. So, like, I'll just, I'll click and I'll just be like, I'll look at price per square foot a lot, and then I'll look at the square footage, because I know that, like, in a good B area, like, it's going to be right around $1 a square foot, up to about $250,000 on the property. So, like, if you stay under the average price in this area, in Dayton is $233,000 right now. If you stay under that, so if we're saying under $200,000 and we see the square footage is 1,600 square feet, we're probably going to be right around $1,500 to $1,700 in rent. Like, that's a quick way to look at it. And so we're trying to look at see if like the 1% rule will come into play here. And the 1% rule is if it's a $100,000 place, can we rent it for $1,000? So I'm trying to just do those quick numbers, and if it looks like, hey, this might be a winner, then I'll start plugging it into the spreadsheets. But I'll start just clicking through and say, okay, nice brick ranch, roof looks pretty good, square footage looks good, and I'll just kind of knock it out through my head, and then I'll say, yep, let's run the numbers on that. Would you agree?
I would agree with that. I think, like, at the beginning, I ran a lot more properties, like hundreds of properties, because you just don't know the areas as well. You don't know the numbers or what you're interested in yet, so you just run everything. But then you kind of find what you like. Like, okay, I like Warren County because the property taxes are low and the rent's still pretty high. So it's like, maybe I'll shop around there. And then you're just, all of a sudden you're running less properties. So it becomes more manageable, because up front it's kind of cumbersome because you're running so much because you're just casting a wide net.
Yeah, but I've learned to like I basically have learned how to make it faster. But I did that by, same thing Jake said, is ran a lot of deals. So now I just like know what a good deal. I saw one last night. A wholesaler had it online. It was like $107,000. I knew the property's worth like 160, 170 grand. Looked at it inside. I'm like, man, even if I have to put 30 in it, that's 137. I know this thing rents for like 1,600 all day. It'd be a good BRRRR method, property for the most part. But like, almost, I know it's going to work. I just ran so many numbers. I know exactly what it's going to work. I think there's a sheet right here in here for you guys. Like, this is a good example. It's a house in Trotwood, and it's just like a nice little ranch, 3-bed, 1-bath. It's 864 square feet, but it's got a big 2-car garage. So I know the 2-car garage is going to add a lot of value into the rent. It's $98,900, so it's under 100 grand. Like, what do you think we can get for that? So Bridgestream said $975 a month. So we're looking right on the 1% rule. And between the square footage and the extra big 2-car garage, looked like a pretty nice place. And it was like updated on the inside. So for under $100,000, like there you go. Like we know that we're close to that 1% rule, and maybe we could get them down and add some closing costs in there. And
the taxes are lower.
And the taxes are nice and low. Yeah, $542 per half. So just being able to go through, and we did that this morning. We were just going through properties, and I was like, oh, hey, I think this one looks good. And so we go from there. So these flyers are all over the table. So this is always someone that, like, there's nothing wrong with saying, hey, let's throw a $92,000 offer in, or $95,000 with $3,000 in closing costs. So
like to dig into the weeds on that one.
Yeah.
When do you get concerned like you're buying a travel? Do you get concerned about the appreciation versus the cash flow?
Now the appreciation
and the quality of renter.
Okay, so the appreciation will probably be a little lower. It's not necessarily like you have to go drive that deal and just make sure it's like on the right street. That's necessarily it's not a bad area by any means. But also like you go buy a place, like I had a guy that said he wanted to buy like a bunch of like 2 stories in Springboro. Like those are $500,000 places. Like where are you going to find the renters?
Yeah.
If those people are just going to buy a home, like very few people are going to just rent a home, like very few people. So that's a very high rentable area. So then you can be pick and choosy on the renter and stuff. So overall, like you've got to balance it. It's like, I know you're in Oakwood, but there's a lot of people that will rent in Oakwood just so they can get their kids in Oakwood schools. Yeah. Well, Springboro schools are like, there's 3 or 4 cities around there that have the same, rated school system. So it's not necessarily a Springboro thing. So are they going to rent it for that much? And there's some smaller homes in Oakwood. There's some Cape Cods, there's some smaller homes. So those options are available there. But for this one in particular, for me, no, you probably rent that out in a week.
Okay.
Yeah, you probably get 20 applications.
Because I would say, a lot of the population is having to rent instead of buying their property.
Okay.
So.
And then I got 2 more. Go ahead. Okay. Yeah. 2 quick ones. The other one is, when you run the numbers, what's your minimum cash flow that you're looking for? And then the second thing is, for me, when I want to buy additional properties, I just replaced AC and furnace about 6 months apart in the home that I rent. And I financed them because it made sense on the cash flow. I was still coming out, $100, $200 a month on top. And I thought, why spend my money when the renter's going to pay it and I could go try to get another property? Is that something that is actually feasible, or should I have done them? I guess it would probably be more fiscally responsible long term to just pay it out of pocket and be done with it.
It just kind of depends. Like, where can you put the money elsewhere? That's always the biggest question to me is like, where can you put the money elsewhere? So like, I think that's a personal, question and stuff. So I look at that and say, hey, can I take this money and make more on it somewhere else compared to what I'm paying interest on it? So, and then your other question was,
how much cash flow will you accept?
All right, so people get caught up in cap rate and like cash on cash return. Like you'll see a lot of people from like Bigger Pockets fans. They'll be like, what's my COC? And I'm like, oh shit. Like I'm looking to build my team. And, I'm like, oh God, here we go. So Bigger Pockets is great, but like you gotta take it with a grain of salt sometimes. But so, I look on total return on investment. Okay, so on our spreadsheet, it has total ROI at the bottom. And I always like to be somewhere like 17, 18% plus. And that takes in appreciation, that takes in paying down your principal, and then cash flow. It's like, it's an overall, would you agree with that? Like to me, like, I'm like, man, if I can get like 17 to 22% on my money, like my total return on my investment, and that's like, I usually put like 2% appreciation, which is really low. 2% is like, it's per year, 2% per year. But I mean, you got to think in like 19, 20, 21, 22, we were seeing 10 to 15%. I wasn't banking on that. So, I mean, my numbers were, I would have to run them. It was astronomical. But if I even just banking on 2% appreciation, I'm like, man, this is, 17 to 22% return. I like the looks of that, because what will happen is if you ran the deal on this, it would say cash flow $1,500 for the year. And you'd be like, well, that sucks. Like, that's not very much, but you're buying a under $100,000 place. So it doesn't look that great, but then you'd see your total return on your investment. It would just be, it would make sense a lot more, because you'd see that appreciation and you would see that principal getting paid down. It's all wrapped into one number. So that's my big number that I look at.
Yeah. Obviously, everybody's from different areas here.
Yeah.
Dayton area, but when you were getting started, did you find yourself primarily in your comfort zone? Like, you're from Centerville. Did you find whether you're flipping or renting, did you catch yourself, or would you suggest staying in your comfort zone getting started?
I mean, I definitely did. I grew up in Waynesville and then live in Centerville now, and it's like my first investment property was in Kettering, and then my next one was in Middletown, and it was a disaster. So I was like, oh, I learned my lesson, shouldn't have gone down there, right? And then I came back to my comfort zone. And I did kind of shop in my comfort zone for a while, and I think you did the same with flips, right? You did a lot of flips in Miamisburg to start, right? Because it's like, you know the streets, you know your comfort zone.
Right.
So I knew everything about Miamisburg.
Right.
I mean,
Yeah.
So it was
And until you get a little bit more acclimated to what's going on.
Exactly.
maybe
Now we're kind of all over the
venture out a
place
little
because you
bit.
get a little more adventurous with that.
flips wise, I think it's really important to know your area. Like investors call me all the time, and I'm like, "You sure you want to flip this? Like this? There's no way that we're gonna like be able to pull that number that you're thinking. Like this is still Dayton, Ohio, and you're totally missing this street." But for me, like I knew everything about Miamisburg, so I mean, I was flipping half my houses from Miamisburg. So investing wise, we're super lucky that our home base is in Dayton. Like the affordability and the barrier of entry is so low that we're in South Dayton and North Dayton. The barrier of entry is so low, so the comfortability is like really easy here compared to some other places. But I did focus on some areas that I knew, and I've expanded a little bit. I mean, I knew nothing about downtown Dayton in the Oregon District, and my first property was 4 townhomes in the Oregon District, and it's now my best investment ever. But I knew nothing about it. I just knew that people were making a big mistake by not buying it because I was a listing agent, and like 10 people passed up on it, and I was like, you know what, I'm gonna buy it myself, and it was great. But I have gone back to my comfort areas and knowing them. I got a buddy that invests in New Carlisle. He's from the area, and he just like only invests in New Carlisle. He knows like every street. I told him one time, I'm like, oh, that place is gonna be worth this, and he's like, nah, no, it's not. I'm like, I was getting ready to list it, and I bet him a steak dinner that I could sell it for like $100,000. And he's like, you ain't gonna get over 90. I was like, I will 100% get over 90. I sold it for 88,000, and I was so mad about it. I almost cut my commission just to get it up to 90, and like and so just like, but he was spot on. He knew exactly what he was talking about. So he always stays in that like New Carlisle area for him, and that's. I mean, I don't invest in it because I don't know the area, but we're lucky that. Like people from all over the country come here, all over the country. We get calls all day. Kara, what do you think your percentage is out of state compared to in-state?
Oh, it's like
Yeah.
we've gotten Hawaii, Israel.
See ya. Thanks, man.
Florida, Texas,
Israel.
California. Yeah, I mean it's just
Yeah.
crazy.
So like all people come here and very few people from dating. Kara said it's 90-10. We about 90% of the people are from out of state. So, which is crazy to think about, but like also rarely do people from Dayton like invest outside of Dayton. I got one property, in Florida. But yeah, so we're very lucky with the barrier of entry being low and comfortability being here. Like we kind of know where you should invest and where you can invest. I mean, like he's got a couple places in Oakwood, but like we know the taxes are super high. He got in before like prices went through the roof and stuff. So you got some good properties there. Like we'd all would love them, but like right now there's no way we can buy them. But yeah, so I always try to go. It's great to start with where you're comfortable.
Okay.
Yeah. If you want to be hyper focused on an area, where are you guys? What's town you guys from again?
Jamestown.
Oh yeah. Okay. Yeah. If you want to be hyper focused on an area, be hyper focused on like that city and like maybe the 2 surrounding.
I just think for myself, the
They're getting a
comfortability.
GM plant, correct?
I'm sorry.
Are they getting a new GM plant?
Yeah, out past Jamestown. Yeah.
Yeah. So might be time to pick up little Tommy.
Country.
Yeah.
Yeah.
Little Tommy needs an owner-occupied place for about 3 months.
Yeah, exactly.
Yeah. So that's fantastic. Does anybody else have any other questions? No. All right, you got one?
I'm sure I have 1,000.
You want to ask one?
Right now.
Okay. Well, you guys can always contact me anytime. If you have questions on lending, like Greg Allen's a lender, talk to him afterwards. Make sure you get his contact information and stuff. So he works with investors, and he's an investor himself, which is always nice to talk to someone that understands your pain and stuff and successes, because he's having great success with his short-term rental. So get his contact information, and you're always welcome to ask us questions as well. Like literally anytime. I do this stuff because I really, really love doing it. And these are like my favorite nights, is just talking to people that also want to progress and get passive income. So you can feel free to call me anytime whatsoever. I truly mean that. So, but yeah, there should be some food left over inside, so grab that. And I appreciate you guys, and bring a friend next time. So it will it seems like the crowd's just a little bit lower when the weather's nice. Go figure, Dayton. We get 70 and sunny every time we have one of these things. So, but I appreciate you guys, and we'll be mingling around here for a second. But if you guys have any other questions, just let me know. Thanks.
We're the Gillen Group. Put your home in the hands of experts.